Welcome to the Swing Trading with Cycles channel. We're going to do an update on DXY today. It is January 14th, so the second trading week of 2023 has ended. And we're going to talk about DXY today. And so just to orient ourselves, I want to be crystal clear. September 2022 was the 3-year cycle high for the DXY. If you're not familiar with what that means, you should definitely take a look at the pinned comment. There's some videos and a write-up about cycles analysis and other content around swing highs, swing lows, and previous DXY videos. The long story short of it is at any period of time, there are 3 cycles that are intertwined: the daily cycle, the weekly cycle, and some kind of long-term cycle, right? So the daily cycle, which is going to last maybe a month or two, and that's going to be measured in days. The weekly cycle, which lasts several months, measured in weeks. And then you have some kind of long-term cycle. In the case of the DXY, it's the 3-year cycle, and we'll show on the chart those 3-year cycles. And none of this is precise. It doesn't mean it has to end exactly on the month 36 or what have you. It's just a ballpark. So the question is, how do we know the 3-year cycle high was September? And we've been talking about this basically since we got the price action evidence that is leading us to that conclusion. We've been talking about the fact that every month that passes, that is essentially constitutes more evidence that the cycle high is in. And at this point, I said this to someone on Twitter, there's not really much else price can do. There's not much more that price can do to confirm for you that the high is in for the cycle, which means, to be clear, if the high is in, it means it's a downtrend from here on out, which, to be clear, meaning we have been in a downtrend since September 2022. And I would expect that we continue in a downtrend for all of 2023 because it's a 3-year cycle. September was month 20. And so we would expect the low to be closer to month 36, which would be January 2024. And so we'll also look at an outlook for the next few weeks. If I'm saying we're going to have lower lows and lower highs for the whole year, well, what does the rest of January look like? What does February look like? What would we expect? And as a corollary to that, what would have to happen to have a bullish reversal to invalidate the idea that we have a 3-year cycle high and that we're going to have a downtrend for the whole year? And finally, some scenarios for 2023. We'll go through all of this relatively quickly, I think. And so the first step is just looking at the monthly chart. So this is actually your weekly chart. But looking at the monthly chart, this is the month that we got our high, September. Right, and you gotta think about this in real time. The first evidence we had was so this is your October candle here. This is your October candle. So the October candle didn't make a higher high or a lower low. So it was just consolidating. But that was your first kind of clue, like, okay, we have a high. What we need is for price to go below the low of this candle, which marks the high. So that was 107.680. And I was screaming this on Twitter, right? So if you're not following on Twitter, you definitely want to take a look there because I try to give real-time updates as things are kind of happening. And so we consolidated for all of October. And then in November, we finally made that low below 107.680. And then what did we do? We got follow through in December. And what are we getting now? Follow through in January. So once we cross below that in November, and I had this line here, I'll make it, I'll make that red. It was like, oh, that's it. Bad news bears. We closed below it. So we closed below that low. And then we made another low below this low and closed below that one. And so it's like, okay, what that means is not only was that a low on the monthly chart, but it also became a low on the quarterly chart. I'll make that line red to make sure you can see it. You see that? So we closed Q4 below the low of Q3. So that makes this Q3 candle a swing high. So you have a monthly swing high that turns into a quarterly swing high. So what that means is we're in a downtrend on the quarterly chart, right? That's what it means to be in long-term cycle decline, right? So we make a low. You expect we make a lower high and then another lower low and a lower high into our cycle low somewhere around early 2024 is the expectation. So if we turn that back into a monthly chart, and just to like zoom in a little bit, this is the week that caused that swing high. So it was week 17, and of course, this is the day. If we go to the daily chart, this day here, so it was September 28th, the fateful day, September 28th, became a swing high on the daily, became a swing high on the weekly because there was follow through, then became a swing high on the monthly, and finally is now a swing high on the quarterly chart. And so if we think about, I got this question, where do we think we are in the daily cycle? Now, we've had this like vicious downtrend, so we haven't been able to close above. So this was a close above the 10-day moving average, I guess. That was your last one. We've had these like 3-day rallies that have done really, so it's been hard to say, okay, this is our daily cycle low, because generally your daily cycle rally is going to close above the 10-period moving average and theoretically above, some kind of declining trend line, if you want to think about it that way. And so this is just clearly sloping lower. So we finally got this push here. So you could say this looks more like a daily cycle advance that just like failed and rolled over. I had called this the daily cycle low here at day 34. And so this would be day 17, and Friday would have been day 21. In actuality, it doesn't really matter. And I said this on Twitter that the daily cycles are murky because it's so bearish. And that's why because I talked about at the beginning, you're always going to have at least 3 cycles intervene and all kind of coinciding, a daily cycle, a weekly cycle, and some kind of long-term cycle. So when the daily cycle is murky, we look to the weekly cycle, for instance. And so we can see, we talked about that 3-year cycle low. These are the weekly cycles that happened with, these are the weekly cycles that happen within that 3-year cycle advance, right? So just to be clear, I don't mean to confuse people, sorry. This was your 3-year cycle low, right? So this is where it started in January 2021, right? And so this is where our advance on the monthly chart. And if we look at that advance on the weekly, that's broken up into 1 weekly cycle, 2 weekly cycles, 3 weekly cycles, and now this is the 4th weekly cycle of the 3-year cycle that we're in. And so if you think about that, and I kind of drew this kind of like roadmap, you can imagine we're going to finally get a weekly cycle low, and then we're going to roll over into another weekly cycle low, and then we'll have a last one. So we're probably going to have 2 weekly cycles within 2023. And again, because we're in a downtrend on the quarterly chart, my expectation would be that, we're going to get a little advance, but then a decline, a little advance, and then a decline, right? So we make lower highs, and maybe even one of these highs is actually really convincing, and we're like, oh no, it actually makes people think that, we're kind of out of the woods, right? But that would be the expectation. And so if we talk about what would have to happen for things to be bullish, it's actually really simple. We talked about those swing highs, right? We would need to break back above, so the monthly swing high is in place below 107.680. So we need to get above 107.680 as a starting point. So that's that would be an important milestone. If a rally can get above there, let's say even 108, that tells you, we might actually be having a trend change. And just like practical terms, if we're going to get a reversal, what we're going to need, what we're going to have to see, so that it's going to be hard to miss because it'll happen in real time, is huge monthly candles, right? We're going to need those, right? So they're not going to just show up out of nowhere. That's what we're going to have to see, something like that. And if we're going to get a huge monthly candle like that, it means the move is going to happen on the daily chart first. You can't have a huge monthly candle without some huge daily candle, for instance, right? And so that's why you don't have to worry about, this is a very high probability trade because it's clear we're in a long-term downtrend. And what would have to happen to reverse that long-term downtrend is, we should be able to see it happening in real time. So just to be clear, in terms of the outlook for the next few weeks, just to go back to think about that very specifically, this weekly cycle has been pretty long. You can see, this first weekly cycle was 20 weeks. So we had a rally excuse me, let me zoom in on that, right? So that's your 3-year cycle low. We have a rally for 12 weeks, and then we decline for 8 weeks. Total cycle length of 20 weeks. Then we have a longer cycle that rallies for 26 weeks and then declines for like 7 weeks. So it's a 33-week cycle. And then we have another shorter cycle, rallies for 17 weeks, very right translated, very bullish, and then declines for only 3 weeks. So another 20-week cycle. And now we're getting another longer one, right? Like it almost seems like a little bit of a pattern. You have a short one at 20, then a 33 one, then a 20. So this week, this second week of 2023 was week 32. So we're getting pretty late. So this is not where you would be pressing your dollar shorts. And just in general, a cycle low, as I talked about the fact that I talked about a daily cycle advance generally will at least close above the 10-day moving average. The same exact concept applies for a weekly cycle, right? So at some point, we're going to get a close above the 10-week moving average, which is this thing that's sloping down. So that'll be an important thing to look towards, right? Like as the rally unfolds, it's like, okay, this will be perfectly normal. It'll be perfectly normal for this to close above the 10-week moving average. And that doesn't actually necessarily mean that it's bullish still. That's just a garden variety scenario that we would expect as part of a weekly cycle advance. What we will be looking for is that the weekly cycles are left translated. So you can see all of these weekly cycles rallied for longer than they declined. So this rallied for 12 weeks and only declined for 8 weeks. Not a very bullish cycle because we almost gave back all the gains. This was very bullish, 26-week rally, very short decline. This was really bullish, declined for only 3 weeks after rallying for 17 weeks. This one is interesting because we haven't failed yet, right? Failing meaning going below the low of the cycle low that started the rally, right? Like we have to go below this cycle low to fail. And at some point we will fail. That is the expectation because we're in that long-term downtrend because we're declining into the 3-year cycle low. So you expect this pivot is going to get taken out at 101.297. It's just possible that we might have a little upside burst before that gets taken out. And so you want to just be careful not pressing the lows here because again, we're late. Here's the other thing to keep in mind though. You would expect that at some point we're going to get a left translated weekly cycle. And so maybe we're going to actually get a weekly cycle that's 35 weeks long because the rally for this was 17 weeks. That's important. Think about that for a second, right? The only way this weekly cycle that we're in right now, the only way it can be left translated is if it rallies for at least 35 weeks. Which would mean, or excuse me, if the low comes on week 35 or later, because that would mean that it rallied for 17 weeks and then declined for 18 weeks. I mean, theoretically, you could have a 34-week cycle, so it rallies for 17 weeks and declines for 17 weeks. That's not exactly left translated, but obviously it's also not right translated, not like these. And if you look at that's how this usually works, right? The advancing phase has right translated cycles and the declining phase has left translated ones. Like look at this one, right? You have these longer rallies, these short declines, long rally, short decline, long rally, short decline. But then you top out, that's your 3-year cycle high. And then you have long decline, short rally, long decline, short rally, right? Is the idea. And you can see it here, long decline, short rally. So we're transitioning into that kind of phase. So if you think about that, that means that if we were to get our cycle low on week 35, that would mean still a few more weeks of downside from here, right? Like that would mean that we don't get our low until the week of January 30th. And also think about that. We're in daily cycle decline. So the next daily cycle low is probably going to also be our next weekly cycle low, right? They're going to coincide. They're going to be the same thing. And if we're saying that might happen the week of January 30th, then we could be looking at a daily cycle low that's like right there. And that would make sense. That would be about 33 days if you count this as your daily cycle. Or there's a world where, let's just say you actually count this as your daily cycle low, right? Like this little rally. That's a 23-day cycle. That works. It makes sense. It doesn't really matter the exact count. The count is just a shorthand for understanding the price action. But that kind of gives us a roadmap that we could see DXY decline into the end of January. And then again, you would expect, this is your daily chart. You'd expect that the rallies are going to be at least 3, maybe 4 or 5 weeks long. Now, you can have a really bearish weekly cycle, like this one topped out on week 2. This one topped out on week 3, right? Like, we don't know. We're going to have to see how that develops kind of in real time. But again, the levels are pretty clear. We need to break above that 107.680. But before we do that, we would need to take out some of these lower highs, like that and that, right? Like those all become important levels that you want to think about, like, you know, the 105.435 area. I guess that 108 gets you right back to that swing high. But like, you know, then like the 106.5 zone, there's going to be upside resistance and supply above that you're going to want to kind of get above. And the most immediate mile marker is making a high above the high of this week that just made a new low. So the high for last week was 103.935. That becomes an important level to move above, because that means you're now starting to make higher highs on the weekly chart, which is a sign that at the very least, price is trying to pause, if not reverse the downtrend entirely. So that's the lay of the land for the Dixie. Incredibly important, since if this thing is going to be in a downtrend all year, as I suspect, it should be good for a lot of risk assets, which tend to move inversely to the Dixie. So that's all we have for now, folks. Thanks for watching.